Okay, good morning, everyone. We are going to work on the practice question to prepare you for the midterm exam. So the question we're going to do, first one is question number one. Okay, question number one. So the question is the company has a December year end and use straight line depreciation for all property, plant, and equipment. On July 1st, 2022, the company purchased the equipment for $530,000. The equipment had an expected useful life of 10 years and no residual value. Residual value equals to 0. The company uses the nearest month method for partial year depreciation. On December 31st, 2023, after recording annual depreciation, company reviewed its equipment for possible impairment. The company determined the equipment has a recoverable amount of $231,200. It is not known if the recoverable amount will increase or decrease in the future. Number one, prepare journal entries to record the purchase of the asset on July 1st, 2022, and to record depreciation expenses on December 31st, 2022 and December 31st, 2023. Okay, so often it's helpful to just draw a quick picture. Okay, so what I will do is I will draw a picture. Okay, just draw a timeline. Okay, so that would helpful for you to see. So this is a timeline. This is the timeline, and then I have a bunch of. I would have a bunch of. Just give me a second. Time point. Okay. How many years? 2024. Probably this probably is enough. Let me see. Yeah. Okay. So I'm going to set up the timeline so that it's easier for us to see. So now I need to do a rearrange, align. I need to align the top. And I also need to align this horizontally, okay? Okay, so suppose this would be January, right? So yeah, January 1st, 2022. And then here is January 2023. Okay, and then here is January 2024. Okay, so that's about it, right? That's about it. So just to make things a little bit easier, actually, I'll do this. And then this one would be in the middle, right? This is in the middle of 2022. So I will say this is my July 1st, 2022, okay? So you can see these are 1 year. So I'm gonna use a different color. Let's see, how should I do this? So I'm going to use a different color. Let me use maybe a red color. So this red color, between the two lines of the red color, that's 1 year. Okay. And the middle one is the middle of the year. That's the July 1st. Okay. So in this case, we learned that on July 1st, 2022, they purchased the equipment. Okay. So basically, here they purchase equipment. Okay. Okay. And then here the January 1st, 2023, that's also December 31st, 2022, right? So this is the 2022 fiscal year end. And this will be the 2023 fiscal year end. Okay, here. Okay, so the first question is to prepare journal entries to record, okay, to record the purchase of the eyesight on July 1st. So the journal entry, okay, so I'm going to here, right? So July 1st, 2022. So what's my journal entry? So I purchased the equipment with money, right? With cash. So Sebastian, what do you think? What should I debit? What should I credit? What account balance has increased? What account balance has decreased?
Equipment.
This is an increase or decrease?
Equipment is gonna be decrease.
So did you buy equipment or you sell equipment?
I purchase.
Purchase. So you buy equipment, right?
Oh yeah, so it's gonna be an increase in equipment and a decrease in cash.
Yeah. So which one should I debit?
Debit equipment.
Very good. Yeah. Debit equipment. So that would be for the dollar amount, 35,000. 530,000. And you are absolutely right. I need credit cash for the same amount, right? So that will be my journal entry for on July 1st, 2022 for the purchase of the eyesight. Okay. Now at the fiscal year end, so this is my first fiscal year end, right? So I'm making it more obvious here. That's my 2022 fiscal year end. I need, if you remember, we have to do the adjusting journal entry to recognize the depreciation expenses at the year end, right? So on the fiscal year end date, we are going to make a bunch of adjusting entries. One of them is to recognize the depreciation expenses. So the time is December 31st, 2022. Okay, so that's the fiscal year end. So I need to recognize the depreciation expenses. Okay, so what should I debit?
Depreciation.
Yeah, debit depreciation.
For 26,500.
Oh, you already calculated the number. So what's your number you calculated?
So it's gonna be 530,000
530,000. Yeah,
divided by 10,
divided by 10,
and then that's gonna be divided by 2
and then divided by 2. And why you divided by 2?
because it's gonna be half of the
Partial year. Very good. Yeah.
yes.
So basically, when you are dealing with that depreciation, okay, so we are doing this timeline, right? So from July 1st to the end of the year. So that's gonna be this time period. Okay, so the yellow color, right? The yellow color, that's the time period between the time when the equipment was first acquired and the fiscal year end. So the time is actually a partial year. You only own this asset for a partial year. In this case, it's 6 months, okay? So 6 months, you will have to consider the partial year into the calculation. So we know that we are using straight line amortization, right? So in the question, this is the straight line amortization method. And we know the cost, original cost is 530,000. Residual value that was given is no residual value. So residual value is 0. And useful life. Useful life
10
is
years.
10 years. Very good. Yeah. So if you normally calculate an annual depreciation expense, so you're going to use your cost minus residual value divided by useful life, right? So the normal calculation for annual, this is for the full year, right? So in this case, I have 330,000 minus 0 divided by 10. And that equals 5,300. But that's for a full year, right? That's for 12 months. In this case, between July 1st and December 31st, there is only 6 months. So therefore, I have to recognize the partial year, right? So for 6 months, what we're gonna do is we say, well, the annual is 5,300 times 6 months. I would say times 6 over 12, right? So 6 months over 12 months is a year. So that's a
Yes.
half. Yeah, that's a half. You're right. So that'll be 2 for, right? So 2650, right?
Yes.
So here I will debit depreciation expenses 2650. And then I am going to credit account. Which account should I credit? So I debit depreciation expenses. What should I credit?
Equipment.
The equipment, the cost is always this number, right? But you remember the carrying value is decreasing, right?
Yeah.
But the carrying value is the difference of two numbers, right? So we do not directly remove a balance from equipment because we want to know what is the cost of equipment. But how can we capture the fact that that asset value is decreasing? We call it the carrying amount. So the carrying amount is the difference between two numbers. It's cost minus what? So the
Depreciation.
yeah, and it's called a cumulative depreciation, right?
Okay.
It's called a cumulative, right? Cumulative depreciation, right? So this one is a control asset, has a normal credit balance. So when it's increased, we need a credit to this balance. Okay. Does this make sense, Sebastian?
Yes.
Okay.
Yep.
So that's good. So we need to record the depreciation on this and on December 31st. So now let's record my depreciation expenses.
Professor,
Yeah,
it's gonna be 2,650 or 26,500.
2,600. Oh, okay.
Because if we divided
Yeah,
500,
you're right. I'm
30,000.
sorry. Yeah, you are correct. I'm sorry. So it should be 33,000 here, right? And so that should be 26,500, right?
Yes.
Yeah, you are right. I'm sorry. Yeah.
Okay.
Oh, this one should be. Okay, so that's correct, right? Okay, so now let's do 2023. So December 2023, 31st, we're gonna do the annual depreciation, right? So this time, we are working on the time period between January 1st and December 31st, right? So now what is my depreciation expenses? What is my depreciation expenses? Because for the year of 2023, this is the time period we are working on, right? From January 1st. So for the fiscal year of 2023, we owned the eyesight for the full year, right? So therefore, should we recognize a full year depreciation or partial year depreciation?
It will be a full year.
Full year, so we're going to use 53,000, right?
Yes.
Yeah, and 53,000. That's great. Awesome. So we are done with part one, right? Part one is to ask us, prepare journal entries to record the purchase of eyesight on July 1st, 2022, and to record the depreciation expense on December 31st, 2022, and December 31st, 2023. So we are done with the first one, okay? So let me use a new slide. Okay. And the second one is to determine if there is impairment loss on December 31st. Okay. So is there, first, the question is there a impairment loss at December 31st, 2023, and prepare a journal entry to record it. Okay, so let's see, how can I go to the first? Okay, so they're asking us on this date, December 31st, 2023, they're asking us at this point, okay, I'm using maybe a green color, okay? So they're asking at this point, is there a impairment loss? Okay, so that is the question. On December 31st, 2023, is there a impairment loss? Okay, so to work on this one, we first ask ourselves, on December 31st, 2023, what is the carrying amount of the equipment? Okay, so this carrying amount is also called net book value. So it is the value, okay, based on the company's bookkeeping, right? So I mentioned this carrying amount is the difference between cost and what account? Do you remember? The carrying amount, which is reflecting the value of the book value, right? It is calculated based on the difference of two accounts. So it's cost minus what?
Depreciation?
Yeah,
Accumulated depreciation. So that's like the total.
Yes, yeah.
Accumulated depreciation, okay.
That's correct. Yeah, and the cost number, right? The cost number is always the same, right? It's cost, that's the 530,000 minus what is the cumulative depreciation, right? So the cumulative depreciation, if you use a T account, okay, so that will be like, this is a T account, right? So this is my cumulative depreciation account. Remember what we have done. So if you take a look at this entry, I will use the green color. You can see that on December 31st, 2022, I credit to this account for 26,500. On December 31st, 2023, I credit this account for 53,000. So if you reflect this to the T account, okay, So that's gonna be like here, credit, right? I will put it balance to the right side. So 26,500, and this is on December 31st, 2022. And then 53,000 for December 31st, 2023. So what is my ending balance on December 31st, 2023? So what is my ending balance? So my ending balance, I'm looking for the ending balance on December 31st, 2023. So what is my ending balance, Sebastian?
It's gonna be 79,500, the
Very good.
total, adding those two.
Yeah, adding those two, right? Because for this balance of this account, as of December 31st, 2023, it's two numbers, right? One is the December 31st, 2022 adjusting entry. You credit to this account for 26,500. And for December 31st, 2023, you credit this account for 53,000, right? So because this is a cumulative depreciation, so in total, up to December 31st, 2023, you have actually recorded the cumulative depreciation of 79,500. Okay, so the difference between these two numbers is, okay, so what is this? 53,000 minus. So what I got is 4,550, 500. Is that correct?
Yes.
Yeah, okay. So this is the value of the asset from the company's perspective, right? But then in this question, it told us on December 31st, 2023, they reviewed the equipment for possible impairment. The company determined the recoverable value. Okay, the company discovered the recoverable value amount that equals 231,200. Okay, so they think that equipment has a recoverable amount of $231,200. So when we are doing impairment testing, okay, so if carrying amount is greater than recoverable amount, there is an impairment. Okay, so I'm testing between the two numbers. If carrying is higher than recoverable, then there's the impairment. And the impairment loss equals carrying amount minus recoverable amount. Okay. So in this case, can you tell me, is there an impairment? In this case, is there impairment? So what is my carrying amount? Sebastian, are you there? Okay, so in this case, my carrying amount is 450,500, and my recoverable amount is 231,200. So my carrying amount is actually greater than recoverable amount. So there is an impairment. So the impairment impairment loss equals carrying amount minus recoverable amount. So that equals 219,200. Okay. So 219,200, maybe 300. Yeah. So this is my impairment loss. Okay. This is my impairment loss. So loss is kind of like expenses, right? So when you think about expenses, you are not happy because you have to pay money, right? When you think of loss, you are not happy, right? So that's why financially, if you think about expenses and the loss, this all means like reduction of your asset or resources, right? So if your expenses increased, if you have a loss increase, to recognize expenses, to recognize the loss, what do? Do you debit loss or do you credit loss? So if you have a loss, just like you have expenses, you debit impairment loss for 219,300. So what do you credit then? Right? What do you credit? So basically you are saying my carrying amount is overstated, right? My carrying amount here is more than recoverable value. So the difference is the impairment loss. So I have to reduce my carrying amount to equal to recoverable amount. Okay. Carrying amount equals cost minus cumulative depreciation. Okay. And we know we need decrease carrying amount. So what should we do? Well, carrying amount equals cost. This cost doesn't change, right? The cost is what you paid for. So cost doesn't change. So carrying amount equals cost minus cumulative depreciation. So if you want to decrease carrying amount so that it can equal to recoverable amount, do you have to increase cumulative depreciation or you need a decrease cumulative depreciation? Are you there, Sebastian? How many people do we have? Anna, are you there?
Yeah, I'm here.
Okay. So in this case, we know this carrying amount, right? This carrying amount equals cost minus cumulative depreciation, right? The cost will not change. What should I do to decrease carrying amount based on this equation? I cannot hear you, Sebastian. Yeah, go ahead, Anna.
Maybe change the accumulated depreciation.
Very good, right? So to decrease carrying amount, should you increase cumulative depreciation or decrease cumulative depreciation? Increase cumulative depreciation. Okay, that's good. When you increase the cumulative depreciation, cost minus So you minus a greater value, so the result will be lower. So when you increase your cumulative depreciation, should you debit or credit cumulative depreciation? Anna, should you debit or credit cumulative depreciation?
Credit?
Credit, very good. You credit cumulative depreciation. So this is the entry for the this will be the entry for the impairment loss. Okay, are we okay with this? Second, the second is ask us if there is impairment loss and prepare entry to record the impairment loss. Are we okay with this part of the question?
Yeah, I am.
How about you, Sebastian?
Can you hear me now?
Yeah, I can hear now. Are you okay?
Okay.
Are you okay with the question number 2?
Yes, so you credit accumulated depreciation. Okay.
Yeah. So when you credit the cumulative depreciation, this second term increasing, and then the carrying amount is the difference between cost and the cumulative depreciation. So by increasing cumulative depreciation, your carrying amount is decreased. So you want the decreased to equal to recoverable amount. Okay.
Yes.
Okay, so let's move on for the next one. Okay, slides. Can I have a new slide? Yeah, new slide. Okay, so let's work on the third question. Calculate depreciation for 2024. Okay. And the carrying amount of the equipment at December 31st, 2024. So in the previous slide, right, we use the straight line method. We calculate the annual depreciation should be 53,000. Okay, now the question 3 is asking me to calculate the depreciation expenses for 2024. We did it for 2022 and 2023, and this is the straight line amortization depreciation. Why should they ask me to do that for 2024? This is the straight line method. Should that annual depreciation be the same? Do any of you have a question? Answer to my question? It's a straight line method. Every year depreciation should be the same. I already calculated my depreciation for 2023. Why should I calculate my depreciation expenses for 2024? Should that be the same as 53,000? Does anyone have an answer to my question?
I don't think it's gonna be the same.
Why? Why they're not the same?
Because we already have accumulated depreciation.
Yeah. So normally, right, every year you have the same amount of depreciation for the straight line method. But why, in this case, the depreciation expenses for 2024 will be different from 2023? What happened to 2023? Okay, so there is a impairment, right? See, in 2023, there is an impairment, okay? So that is going to change quite a bit, right? That's going to change quite a bit. So what is my carrying amount on 20? Okay, so let me do this. See if you understand this. This is number 3. Question number 3. So on December 31st, 2023, what is the carrying amount after recording the impairment loss? So remember, we recorded an impairment loss on December 31st, 2023. My question for you is, what is that carrying amount after we recorded impairment loss?
It's gonna be 2,1900. 219,000, sorry.
Okay. Say that again, please.
So it's gonna be 219,000.
Okay. So you are saying it's gonna be this number, right? It's gonna be 218.
Yes.
It's gonna be 219,300. If you pay attention, this is the impairment loss, right? This amount is not a carrying amount. This amount is impairment loss. It's not a carrying amount.
Oh, okay.
Yeah. So when we do the impairment loss, what we are reducing the carrying amount to equal to what? By booking impairment loss, we are trying to bring the carrying amount down to which value? So we make a general entry to recognize the impairment loss so that the carrying amount will decrease to which value? On December 31st, 2023, the book, according to the book value, it thinks to be 450,500, but that does not reflect the reality. In reality, what is the value should be in the company need to make adjustment?
Is it the 231, 200?
Yeah,
Yeah.
that's the whole point. Very good, Anna. When you are making this journal entry, impairment loss, you decrease carrying amount to equal to recoverable amount. Okay. So after you are making the entry of the impairment loss entry, your carrying amount should be equal to recoverable amount, right? So that should be let me see, where is the number? That number should be 231,200. Okay. So if you don't think so, but let me show you in another way, right? Okay, so this is what we did, right? Remember, now you make this entry, okay? The cumulative depreciation, right? The cumulative depreciation will be a different value, okay? So let me put this here. Okay, so prior to the impairment loss, your cumulative depreciation balance is 79,500, right? But now you are making another entry, you make another entry, you credit cumulative depreciation for 219,300. Okay, so I need to add that. 219,300. This is also on December 31st, 2023. This is the impairment loss. Okay. So now what's my balance after the impairment loss? So my balance should be $298,800. Does that make sense? Is that correct?
Yeah, I think so.
Okay, good. So then what is my carrying amount, right? So the carrying amount equals cost minus cumulated depreciation, right? My cost is 530,000. My cumulative depreciation after recognizing the impairment loss is 298,800. So what is that difference? So that difference is, okay, 231,200. Does that make sense? See, either way, your carrying amount is equal to 231,200, right? Does this make sense?
That's gonna be 0.3.
Yeah, we are working on question 1, number 3.
Yes, yes.
Does this make sense? My carrying amount after the impairment loss recognition.
From where you got the 298,000?
I add up the 3 number
Oh, okay.
because that will be my new balance after the recognizing the impairment loss, right?
Yes.
And then I take the difference between cost and the cumulative depreciation. I figured the carrying amount is 231,200, which is equal to the recoverable amount.
Okay.
Yeah, does that make sense?
Yes.
So instead of going through this calculation, if you understand everything conceptually, you will know the whole point of impairment loss is to bring the carrying amount down to recoverable amount. Okay, so that's your carrying amount. So I'm going to use the straight line method. Straight line method. Now my cost is my carrying amount. 231,200. My residual value is still 0. Now, how many useful life now? How many useful life?
Eight years.
8 years left. Okay. So let's think about this. Yeah, you're right. Definitely not 10 years, right? Originally, on July 1st, 2022, you can use it for 10 years, right? So from when you first buy it, you can use it for 10 years, right? So from here to 10 years. So how many years has passed by? So we are talking about the time point at the green dot, right? We are talking about December 31st, 2023. So how many time has elapsed since July 1st, 2022? How many years has passed since July 1st, 2022? For how long you have used this equipment? We are talking about on December 31st, 2023. For how long you have used this equipment?
From July 1st, 2022 till
December 31st,
December 31st, 2024,
2023?
2023?
Yeah.
That's gonna be a year and a half.
A year and a half, right? Okay, so now on this slide, how many years left? So from December 31st, 2023 ongoing, how many years left?
So that's gonna be minus 1 year and a half.
Yeah, 10 minus 1 year and a half. That's 8.5 years, right?
Yes.
So now you calculate your depreciation expense, right? Annual depreciation expense. So let's see, now this number will be different. So I get 27,200. So my depreciation expenses is 27,200 for the year of 2024. Does that make sense?
Okay.
Make sense?
Yeah.
Okay. Yeah, so that's good. And now I'm going to write this down. Okay. Now we have 27,200. This is December 31st, 2024 journal entry, right? Yeah. Right? Because that's your annual depreciation expenses for the year of 2024. You made the entry on the fiscal year end 2024, right? So now they ask us, what is the balance on? So they ask us, what's the balance on December 1st, 31st, 2024? What is this balance? This balance is, let's see, 326,000. Is that correct? So on December 31st, 2024, your
Yes.
cumulative depreciation should be 326,000. Is that correct?
Yes.
Okay. So then what's your carrying amount? So your carrying amount will be equal to the cost, 330,000, minus your cumulative depreciation. So you get 304,000. No, 204,000. Is that correct? Anna?
Yeah.
Okay. How about you, Sebastian? Is that clear?
Yeah, it makes sense.
Okay. So this is my third question, right? So I think after working on this question, we need to understand, right? For each account, the balance will change, right, over the time. So you can take a look at this T account, cumulative depreciation, this T account, right? You see the balance as of December 31st, 2023 is different from the balance as of December 31st, 2024, right? So therefore, if I'm able to use T account to capture all the journal entries, and then it's very clear for me to know what's the account balance at a certain date, right? So that is very useful, so we won't be confused, right? And you can see that the straight line method, originally we calculated based on the cost, residual value, and useful life. We calculated the annual depreciation is 53,000, right? But then, very interesting, because there is impairment loss, okay? So then I have to recalculate my depreciation expenses, okay? So when there's impairment loss, you have to recalculate it, your depreciation expense, okay? Because normally straight line method, right? Every year the depreciation expense is the same. But once you record impairment loss, your annual depreciation under straight line method will be different. So it's pretty clear as shown in this example. Okay. Okay. Do we have any questions for question 1?
All good.
All good, yeah.
Okay, awesome. So I'm going to stop recording on this one.